Hello guys, and welcome to Daily Market Movements. Welcome to another episode of Commodity Watch. During today's video, we are going to be analyzing the gold markets as well as the crude oil price chart. Yesterday, I posted an episode of Commodity Watch where we looked at gold, and that's what we're going to start off with for today's video. We're going to just quickly analyze the gold markets, as I've noticed something rather interesting has happened, and I've just placed a trade here in the gold markets. Okay, I've just placed a trade on my own account here in the gold market. So if you would like to follow my trade, then let me explain it to you. Gold, very interesting. This 1830 area. If you watch yesterday's episode of Commodity Watch, you would have heard me, explain why. We're currently trading in this ABC correction, and for us to go higher, to go and target at the top of the A level, we would have to break above this 1830 area, which will then take us to the 0.5% fib level. I think eventually, if we did break above 1830, of course, we would break above this 1875 area to go and trade up towards 1920. But on 3 previous occasions, as highlighted in this white box, we have been rejected. You could even say 4 times we've been rejected from this 1830 area. And as you can see, for the 5th time, we're attempting to break above it once again. The start of this week, we've seen we've seen a lot of strength here in the gold markets. That's what I should say, sorry. We've seen a lot of strength going into the end of last week and going into the start of this week, which has shot the gold markets all the way from that 0.23% fib level down at 1772, all the way up towards 1830. And if I get rid of this box here and put a circle as to where we're trading now, this is very important. But I have just opened a short position in the gold markets. I do not believe we are going to be trading higher than 1830 in the short term. I do see us pulling back. Now, let me explain why. Why do I believe that we are going to get rejected here at the 1830 area? And that is because we are trading in a long-term downtrend, as you can see. So from the highs here in the gold markets that we achieved back at the beginning of August 2020, that was the 7th of August, when we went as high as $2,073. We have, we've been in a bear market, you could say, and that's, for over 12 months we've been trading towards the downside. And as you can see, we are attempting to break out. Now, if we do break out here, I do anticipate an explosive move. I think we smash through the 0.5% fib level, and we do go as high as 1900. But as you can see, we're really struggling here at this 0.38% fib level to break above. And there will be some traders out there who would argue and say, well, Max, this could just be a massive bull flag, and if we break out, then we could see the gold markets fly all the way back towards or above $2,000, and that is correct. Okay, if we are able to break out of this downtrend, then you are right. We may see a huge break towards the upside, but personally, I am against that. I think that gold, medium to long term, we will go lower. And the reason being is because the tapering process has started to begin, and I personally believe that we will start to hike interest rates in Q3 2022, which will be before most investors are anticipating. At the moment, the dot charts suggest that rate hikes will begin in Q1 2023. So if I am right by my assumption there, then typically speaking, that will kill the gold price, and we will see a breakdown further. But that being said, as I mentioned in yesterday's episode as well, if we zoom out here, if I go onto the weekly chart and go all the way back to what the gold markets did back in 2008, 2009, which is when the financial crisis occurred, and of course it sparked a huge bull market. But gold didn't actually hit its peak all-time high until September 2011, which of course was 2 to 3 years after the financial crisis. And if that was to be the case here, then you would see gold, hit its all-time high going into 2003. But what's different between the 2008 and 2009 financial crisis and the gold markets this time around with COVID is that we have snapped out of this bull market. We had a nice uptrend which persisted throughout those years of 2008, 2009, 2010, and then of course 2011 is when we hit our peak, where in 2020 we saw that fantastic bull run. But what's happened? We've had that massive downtrend since, and that's similar to what happened when gold peaked back in 2011. We had that massive downtrend, which eventually resulted in that huge move towards the downside. So that's what I am anticipating here for the gold markets. Medium to long term, I am very bearish. Short term, we could break break it out of this downtrend. If I just go back into the daily chart, 1 second, here we go. If I go back into the daily chart and we are able to break above this 0.38% fib level and out of this downtrend, then gold markets are very likely to go flying towards the upside. Towards the upside. But short term, I have just sold the gold markets. Okay, so let me show you what trade I have just opened. I'm going to open up my short position here. So I've just sold the markets bang on at around 1826, and I am putting my stop loss midway through this fib level, so around that 1845 area. Okay, and my target, that's a very good question. I'm targeting the 200-day EMA, okay, because that's where I do anticipate some support to be found here in the gold market. So make sure you note down these key levels. I have opened a short position here in the gold markets at 1825. My stop loss is up at 1845, with my take profit being down at 1795, so just below that large psychological figure of 1800. And I really do anticipate this trade to come in and make me some profit. So I have shorted the gold markets. Of course, going forward, I will be posting episodes following up this trade. I'm going to keep this here. I'm going to save my chart as it is, so that the next episode we will look to see how this trade has performed. But let's go and analyze the crude oil markets. Now, crude oil, very similar to the gold markets. We are really struggling to break above previous resistance here. I drew this Fibonacci chart, and we've previously tested that 1% area, which is all the way up at $85, and we are now started to be be rejected from the $85 level again. But I am not shorting this position, and you may ask me why, and that's because, look, crude oil is in a massive bull market, where if we go back to the gold market, where the gold market is also being rejected, we're actually in a bear market. We are in a massive downtrend since August 2020, where this is in a bull market. So I would not be surprised to see this turn around, but I also would not be surprised at all to see the crude oil markets go and target $80 a barrel. So I'm not going to short this bull market here in the crude oil. I think that would be rather suicidal for most traders accounts, especially if you're a retail trader and you are trading with high leverage. In fact, what I'm going to look to do here in the crude oil markets is buy the dip. So I'm going to put a circle here. This is an area where I'm really hoping the crude oil market will dip to, and $80 a barrel is an area where I will where I will try and buy the crude oil markets and ride it back up towards 85. So again, I'm going to save this chart so that the next episode here that I film, so that's the next episode of Commodity Watch, we can then look back at the crude oil markets and the gold markets to see how they have performed. But I've opened a short position in gold, as I just mentioned, and the crude oil markets, I'm being patient, waiting for that dip, which I expect to occur down towards $80, and that is an area where I will buy back up towards 85. This strategy would have worked very well. We've already dipped down to $80 twice and gone straight up towards 85. We did it again here, and I do anticipate it to happen for a third time. So thank you very much for watching today's video. I hope that you follow me on my gold trade, and of course stay posted with regards to my upcoming videos, and make sure you go and subscribe to my streaming service if you would like to follow us on this journey.